Welcome. This is the Trading Pit, your home for sophisticated takes on the crypto markets. It's May 28th, the last week of May. Here in the studio is JJ and Ben Lilly of JLabs. I am your host, Marconi White. And now the market is continuing to digest the historic news of the ETH ETF, while the Mt. Gox trustees prepared to move 142,000 Bitcoin. Insane. We're going to be unpacking all the implications of these moves. But first, it's rapid fire, where I look for simple answers to complex questions to get these guys revved up. You guys ready?
Ready.
Whole new week, excited?
Revved.
Oh, I love to hear it. Love to hear it. All right, JJ, we're kicking off to you. Which ETF, BTC or ETH, will have a bigger impact on the asset's price in the year one?
Year one, I'd say Bitcoin.
Oh, really?
Yeah, year one. We'll see.
Even with all of the supply constraints that Ethereum has,
I think it'll take a little bit of time for that narrative to permeate and ultimately get institutions to bid it up. I think it'll be stronger over the long term. But
hold me back. Hold me back.
Hold me back. Yeah. Ben's eyes are starting to poke out of his head. Oh my gosh. All right. Ben Lilly, does the ETF improve or hurt Ethereum's fundamentals?
Short term, I believe it's going to be a positive impact and kind of self-fulfilling prophecy there. But long term, I think it does do a little damage.
Oh, a little bit of tarnish. Oh, man. We'll probably have some people in the comments coming after you. JJ Saylor now says Bitcoin will be the leader of the new digital asset class after weeks and months and years of saying nothing will ever be approved other than BTC. Does Ethereum's ETF help or hurt BTC flows?
I think it helps. I think any adoption is good adoption. And we've seen this time again throughout previous cycles, is that when all assets tend to go up crypto-wise, it's good for Bitcoin. So I think that there's no reason to believe that'll be different. And ultimately, the more money that comes in, it'll find its way into Bitcoin one way or the other. And I think everything will go up together. Okay.
He won't have to change his tattoos. Ben, does a Solana ETF happen in 2025?
That's a good question. It doesn't have a futures ETF like Ethereum had, but I do believe there will be a full court press in 2025. Especially because there's a grayscale product already in the market. I would expect the narrative in the push around that happening to really pick up steam in 2025. Does it happen? You know what? I'll say yes. I think it does happen next year.
Oh man, on the record for Solana. Can't believe we're saying that with all the meme lords coming out. JJ, last one here, and it's not about ETFs. According to Google search, Koreans prefer crypto to stocks. Is crypto the future of all investing?
I wouldn't say all, but probably the fair share of it. I think we'll see kind of the tokenization and real world assets, all of those different things, and even stock market trading eventually move on chain over the course of the next decade or so. So it's definitely the future. I don't know.
Does that get you excited?
100%, but yeah, it's coming.
Okay. You and Larry Fink are in that boat, trying to tokenize everything.
Yep.
All right. Well, we're going to unpack the latest news around Mt. Gox. Before we do, I want to give a shout out to everyone who's here in the chat. I got Light Signatures, Adrian, David, Ahamium 108. That's a good one. Venus, Al Ababa, Martin Lipak, and Preet. Gentlemen, welcome. Love to see you guys here. Hit the like and subscribe button. So glad to have you here in the last week of May. As we're unpacking all the news that's hidden our desk and hitting everything else in crypto. Let's talk a little bit about the Mt. Gox situation, which has been going on. If you've been in crypto for any length of time, you know this has been going on for, gosh, it feels like a decade or longer. And I still don't understand why the people can't get their money back. But according to CoinDesk, this is on their website, Mt. Gox transfers $9 billion in Bitcoin to single address as part of repayment plans. Goes on to say nearly 107,000 Bitcoin have been moved since early Asian hours on Tuesday, with Bitcoin shedding 1.2% on expectations of selling pressure. JJ, I want to ask you, this news event comes out about selling pressure coming from Mt. Gox. This isn't the first time we've heard about this. I want to say even 6 months ago, we were hearing about the Mt. Gox. The details that I read this morning was that they have to distribute all their funds by October. Is this an event that the market should be looking at, or is this just something that's really trying to grab a little bit of attention in a slow week?
I think from what we saw from the headlines, it came out and later corrected that the trustee was just moving funds around from different wallets, so caused quite a bit of stir in the market. And you see, if we want to look at the futures data here to see how many actually got liquidated as that news came out. So you saw large move up on Sunday, and as we always are talking about on the weekends, you want to be extremely skeptical of chasing any moves, especially on leverage, one in either direction, because they just tend to reverse by the time the futures open. So we saw kind of this scam move up above 70,000 or so yesterday. A whole lot of shorts were liquidated. And then ultimately, the timely news relief that Mt. Gox wallet had moved some coins came in, and we saw a bunch of longs liquidated to the downside. And then later, after, of course, the move already happened, they said, oh, the trustee was just kind of moving around wallets from, or moving around Bitcoin from one wallet to the other. And it's not actually a distribution event happening. That's not scheduled until October or so, I believe. So it seems like it's basically nothing burger, at least as of right now in the moment. In terms of preparing for that, I think we will see a strong correction prior to October. So if that's the actual date, which remains to be seen, if they're going to distribute those coins in October, we'll probably see the market start to strongly correct around August or so. And more than likely, the distribution event will mark the bottom, as is typically the way these things go. When it's that well telegraphed, the market gets ahead of it, is well positioned, and I would assume a fair amount of these Mt. Gox coins, I think it's some massive amount, 100,000 or so. Probably a large amount of those have already been sold over the counter. There's probably a lot of hedging that's gone on. So it remains to be seen how much of an impact it is. I don't think it's going to be an event that just nukes us to zero, but we'll probably see a 20 to 30% correction ahead of the event in October when it eventually does come.
So it could really be a nothing burger up at the actual event, and probably a lot of activities and fluttering happened before. Ben, I want to ask you, I mean, we got Mt. Gox, which has a large cash. You've got the U.S. government, which also has a large stash, which I think it's acquired through various, FBI stings, CIA stings, Silk Road type of activity, claiming all that. Is it worth looking at any of that at all in terms of trying to find some alpha or worrying about it? It feels like it's going to happen as it happens. And, the market seems to get ahead of itself when it does. But is there something really, alpha rich in terms of following this activity?
People spend hours on, creating these theories around the wallets and the transfers and, when this court case is going to actually distribute funds. And I haven't seen anything that's really worth just watching out for. I mean, CoinDesk is going to run a headline that something impacted price by 1.2%. That's reaching for something right there. So
isn't it though?
It is. I know it's a bit slow over the weekend and kind of coming in here on Tuesday, but if that's all that's happening at the moment, clearly the market's not waiting for that. So as far as trying to time anything, I really wouldn't be too concerned about it. I mean, I know that the U.S. government, whenever they're selling anything, it seems to be poorly timed. If anything, just watch out for like the Ethereum Foundation, because they seem to have pretty good timing with the market. I would consider that more signal.
100% hit rate. Yep.
Yeah. All right. That's the signal you need to be looking for, is the Ethereum Foundation when they're selling. Time to worry.
And I'll add one thing: this Mt. Gox thing continues to get dragged out. So even those dates that are being discussed, I would not even imagine those dates get hit. So
yeah, it's been years now. It seems like it's just it's never going to happen.
Is it absolutely insane that FTX may actually pay out creditors before Mt. Gox? The biggest scam. I mean, in Mt. Gox history, right? They got taken out by a hacker who took the money. If I'm understanding the history correctly, with the FTX, obviously just absolutely poor management of the funds and all kinds of other fraud. Yet they still managed to have some settlement on the table to be able to pay people out, even though I think it's debated how good it is.
I'm not a lawyer, and I haven't really been watching it that closely, so I don't have, I would think, any good insight on what's happening there. But it just sounds, even the FTX estate, it sounds just really messy. And the fact that it hit the U.S. courts, unlike the Mt. Gox situation, I think plays into some of this, the timing, as well as kind of how creditors are being paid. So you got to take each situation kind of on its own. And Mt. Gox was so early on in the ecosystem as well.
Yeah.
So not a lot
All
of
right. Well,
precedent there.
yeah. So if you're looking for good signal, it definitely seems the Ethereum Foundation is the one to be looking for, and not necessarily Mt. Gox or the U.S. government. Adrian Fleur says, yeah, those guys are truly masters of the craft. I think we agree. I want to say welcome to Paul J. Hello world. Good to see you guys here. All right, let's move over and talk a little bit about the markets. I was sharing with these guys before the broadcast that it feels like everything just happened all at once. We got this ETH ETF come in, big news. Now we're trying to digest it and say, okay, what's going to be the next narrative? Obviously, we're going to continue to see a lot of activity in the options market. I was looking at some of the activity before in terms of volumes that are just going to be expiring this week. And then we see a lot of it as it starts to go into June. So there's still a lot to talk about. We're going to unpack it right now. So I looked at some of the numbers beforehand. BTC was sitting around 68,000. Ethereum still hadn't broken above 4K. And Solana was sitting about $170. ETH BTC still sitting, at a good high above sort of its low. And it looks like it's finally bottomed out. Which was interesting. And then the ETFs, I looked at the volumes for last week. We had over $1 billion of inflow, and the Grayscale Trust really looks as though it's really started to stop the bleeding. It's single digits numbers, and I think they were all positive. So we're really starting to see a reversal on that. Could see some interesting traction for the rest of the quarter. So JJ, as we now have moved beyond the ETH ETF, that speculation is off the table. We know that it's going live. We actually don't know when the S1s will be processed and the trading will actually start, but that's just a matter of getting through some of the paperwork, but it's probably going to take some months. How is the market looking today? Knowing that yesterday was, at least in the United States, there was a holiday, so we didn't have the trading activity.
I think it actually looks great. So last week we were a little bit cautious just due to how quickly price moved up, right? We went from low 60Ks to over 70K again within a week. And obviously Ethereum shot up from 2,700 or so to nearly 4,000 basically overnight. So anytime the market moves that fast and rapidly, you obviously have a bunch of leverage chasing and the option squeeze, whatnot. There's just a little bit of froth was showing itself, and we need to come back down and ultimately form a higher low. And so far, it looks like that's what's happened. And now we shot down to around 66K on BTC last week, recovered nicely there into the end of the week. The weekend price action was obviously bullish. Same with Ethereum. We came down to 3,500 or so late last week and then ultimately recovered. And right now we're consolidating right back below the highs. So market structure looks really good, really healthy. I think in terms of a monthly close, this is essentially what you'd want to see is price gain a little bit of momentum here into the end of the week and ultimately form, if we look at the Bitcoin monthly chart, this could form obviously a bullish engulfing candle, erase all of the ground we lost in April. There's no other way to paint this other than bullish. And you got to look at all these different time frames. The chart just looks encouraging, and it looks like it wants to go up higher, provided that this 67K or so region holds as a low into the end of the month. And especially if we can get a monthly close above 70K, 71K, I think that's a very encouraging sign for June. So it's going to be a pretty pivotal week here. Obviously, anytime you head into the monthly close, the way that price action shapes up is pivotal on a go forward basis. But as of right now, in this moment, I think things look great for higher highs in June.
JJ, you just said it well, right? Everything looks great for higher highs in June. Do we need a positive catalyst to push us out and above the 72K kind of cap or high? Or is this just something where we're going to continue to see a grind higher as there just isn't a lot of sell pressure?
I think we already had it, and the market's kind of in a bit of disbelief. Like the kind of seismic shift of the U.S. policy stance on crypto that's taken in the last week, that's well above any catalyst anybody could have dreamed of just a month ago, right? And now we have it, and the market's still kind of like there's enough disbelief in this rally to where I think it could go exceptionally higher in June if the next few days play out well.
Okay. Walk us through what we're seeing in terms of the expiration for the end of this month, May. When I was looking before, it was about 4.6 billion in notional, which was quite high. And I think we're seeing a decent amount in June. So what is this telling us?
This is the main reason why we see such resistance at 70K is due to this call wall that we have here. Anytime you have this much open interest on an expiry as large as the end of May, obviously 4.6 billion of notional value, and of that around $250 million is in this 70K strike alone. So it's going to be tough for price to get substantially above there in the coming days, but that's kind of your line in the sand is the 70K mark. once these contracts roll off, price will be free to move up to the upside from there in June, as those contracts will no longer be on the book. So I think that's going to continue to hold as resistance for the next couple days here until we get past Thursday night's option expiration. And then we should be cleared for higher if the market wants to take it that far. As we look out towards June, we see that there's obviously a lot of open interest above these levels as well. So there's enough fuel here, especially at 75K. Price can start to push beyond that wall. We could see a pretty explosive move above 80K in June, I think, based on the way this options positioning looks.
And I do want to ask one question that kind of, I'm not sure puzzle me was the right one, but if I look at your screen right now, I see call open interest about 60K, I'm just rounding. And then we got the put open interest, which is about 26K or 26,000 rather. Do you see anything worrying about the fact that it feels like the market isn't getting any kind of downward, I'm saying insurance? They're not buying a lot of put interest. There isn't a lot of put interest to try and cover some of these positions.
So what the market actually does, and we could see this here looking at this skew, is that the skew is actually negative for the end of May expiry. And this means people are paying more for put contracts expiring at the end of May than they are calls. So right now you see the market hedging themselves with shorter dated puts and buying longer dated calls, which is ultimately a bullish signal. It would be a bit more worrisome if there was a whole lot of put open interest, say below the current range at like 65K or so. I think if price were to lose momentum, start to fall below 66, 65K, you'd probably see a whole lot of put open interest start to pile in and people hedge themselves a bit more. But right now it's just a bullish market and people are preparing for more upside than downside. That's all that's kind of telling you. And they're hedging their bets with shorter dated put options, which is ultimately bullish, right? You want to see longer dated calls bought and shorter dated puts bought as the hedge. And then that ultimately gives more room for expansion to the upside in that kind of positioning.
Okay, so I'm everything from a crypto perspective is looking very bullish, at least as we go into June. I know we'll talk about outside forces in a moment. Ben, I want to bring you up here. You know, I talk tongue in cheek about Ethereum and its fundamentals. Oftentimes when we go over the market update, it's all around Bitcoin because it's the King Kong of this market. Yet I think as Ethereum has now established itself with having its ETF, it's got the same contracts, its futures. Now it's going to have the ETF. It's sitting there as the second one in the asset class. How do you look at the importance of studying that as we do market update? Can we spend, do we need to spend as much time on that going forward? Is it going to continue to take a larger mind share of this market? What are your thoughts there?
There's a lot of thoughts. I'll start off by saying that.
I hope so.
How much time you got, buddy?
Yeah. Seriously. You can't let the can of worms open up here on Ethereum on me, but here we go. There's a lot more talking points associated with Ethereum when it comes to really all of the entities that are starting to get involved in crypto. And Bitcoin, that narrative is very strong when it comes to the one that has been formed, essentially sound money, peer-to-peer payment network, and essentially a hedge or digital gold. That resonates really well with everybody. And so having some exposure in your portfolio makes a lot of sense. And that's kind of easy to sell. And they've done a great job so far. You see the allocations coming in there. When it comes to Ethereum, I do see people testing out narratives right now in the market. I love the one that somebody dropped that had to do with kind of the Apple Store. And that's kind of the Ethereum network. And then you go ahead and there's a bunch of applications that exist within the Apple Store that can help power your operating system. And so that's how people are trying to sell Ethereum at the moment. And I think that's good. And I think what it does is it opens the door of what are all these applications? What is this operating system? Tell me more. And so when you think about having an allocation, this isn't really a hedge. It's not digital gold. This is more of like the next stage of technology or the internet. And so that allocation has kind of a different mindset attached to it. And I would fully anticipate that a lot of the institutions that are talking about these narratives to their clients to adopt a lot of these talking points and explain that, hey, look, you do need to have some exposure to this asset class. And this isn't a talking point of hedging oneself. This is a talking point of getting upside, right? This is future tech growth type of discussion points that we see, especially with NVIDIA, for example, and how that just has a complete mind share of the investing space right now. I would fully anticipate when it comes to Ethereum down the road, that's going to be able to capture a similar um, mind share as well. Because now you have JP Morgan being able to talk about it, right? They've been very anti-Bitcoin for a very long time, and they still are to this day. And then you find out that they actually went ahead and purchased millions and millions of dollars of Bitcoin. But when it comes to Ethereum, they forked the network. They're still working with other blockchains and layer ones. And I think they were working with Avalanche, if I'm not mistaken. And they've been running, the JPM coin for a while, which is essentially their settlement network that's on a private network, and even charging interest rates for repo by like the minute or the second. I forget what they're doing, but they see a ton of value here. So why are they not going to go ahead and express all of the work that they've been doing over the last, at least 7 years? I think I've seen them really active in the space, and they're spending that much time. And you got to think, why? Why are they spending all that time? And I think they're going to be very proud to talk about it because they're going to be able to pitch themselves. They are no longer a custodian of assets or this essentially large ass Wall Street institution. They are a FinTech company, right? And so now they're demanding higher premiums on their stock, right? They're no longer 10x their sales. They're a tech company. So now they can command a price to sales ratio of like 40x, right? I think that's where they're going to try to paint themselves. And that's how they can do it, by talking about how Ethereum is so powerful for them. I'm looking forward to hearing that dialogue. And as far as you wanted me to talk about the fundamentals, I believe,
Well,
Marconi, when we started, but the worms started flying out.
yeah. So yeah. So for everyone out there, if you're interested in hearing me interview Ben specifically on the fundamentals of Ethereum at some point this summer, let me know in the chat, because I imagine he could go on for hours. So I'm gonna stop you there, Ben. I want to actually pivot within this little circle to more of a specific point that maybe the audience is thinking about, which is specific around price. There was a question here and says, from JB, how do you see ETH behaving in June? Without reacting specific to that price, Ben, I want you to give an overview of how you think Ethereum with ETF volume, with the 30% that's staked, how does that react? Because there's a narrative that's already forming specific on XR within our little community that people are just going to see explosive price action on Ethereum as these ETFs start to come live. I think I saw this morning, there were the headlines that 14,000 was the price target for 2025. I think that was coming out from Zero Hedge. And, people are underexposed to Ethereum because they've been so over allocated to Solana and other areas. So how are you thinking about those relationships? And I'll just, before you answer that, JJ mentioned that, he sees it as a slightly different beast. BTC will actually probably, for its price, do better in year one, which I think is one perspective. You just mentioned the challenge with the narrative of getting it down for Ethereum. So as people are thinking about these price points, and you're thinking about there's value in Ethereum being this massive ecosystem, but there's also a challenge with adoption, right? With explaining it to people and for them to synthesize these ideas of what it is. How do you think about those, the supply, the demand coming together and impacting price over the next 18 months?
It has a very interesting use case that you can see, and you can see it in the data, and you can drive metrics off of this, which is really, people are using Ethereum as a store of value token that changes the liquidity profile of the token. So when we think about like fundamentals, one of the metrics that I'll pull it up here. This metric is from our old private app, so it's actually not updated on kind of the newest metrics as they pertain to eigenlayers, supply of Ethereum. But what this is we broke down Ethereum supply into these buckets. M0 is like just tokens sitting in your wallet, just idly sitting there. And so when we think about Bitcoin and this supply crunch and tokens that haven't moved in a year, right? These tokens all sit in M0. They all sit in somebody's wallet. And so the way that they break it down is they try to change the liquidity preferences of that token in a wallet based upon when it's moved the last time around. This doesn't do it. We're just breaking the token into M0, M1, M2. M0 is sitting in somebody's wallet. M1 is sitting in a contract. Now, just because it's in a contract doesn't mean it's illiquid. It can be in a swap contract and fully liquid and accessible to the market. But we put that in an M1 category to showcase like the utility of the token. People are actually going out and using it for something. And then M2 is in an illiquid environment. So this would be lending it out. This would be staking it to the beacon chain. A liquid staking token would be sitting in M1 because it's in a contract and it's still liquid. Okay, so these are like minor little nuances that exist. But my point being, you're not going to see a band as big as this on M2 for a token anywhere else. And if we were to actually update this, which we're not because it's being updated for Panda, our dashboard kind of terminal product that's going to be hitting market. But if we were to update this, you would actually see the salmon color band be much larger because there's a lot of tokens moving into eigenlayer that are becoming more illiquid. So why is this important? Like, why does this even matter? Well, it matters because the liquidity profile of a token has a direct response to how quickly it moves in a change in demand. So if you have a little bit of a change in demand on the token, if the token is very illiquid, the price movement is going to be much more severe, likely to the upside if it's an increase in demand. Okay, so that sort of change in price is what we're trying to track. And we go ahead and we do this for all layer one tokens that we're watching. And this is part of token ratings. This is just one of the models that we run. And so we run token supply and we go ahead and build a model off of it to help us predict price. And Ethereum's had one of the strongest usages of its token for the last probably year. And so we haven't seen any demand, right? If we actually go to some of the models that help us look at demand, they've been terrible. I'll be straight up honest with you. Like the gas, in a way you can check for yourselves. And I'll actually just go ahead and do this while we're talking here so the audience can see it. The gas fees have been atrocious on Ethereum. Like this is kind of I don't want to say alarming, but it hints at like the difficulty that exists right now with the Ethereum ecosystem.
Ben, are you sharing something around gas fees? Because I'm still seeing the old token supply. Just to clarify.
Yeah, not yet. I'm
okay.
Trying to get there. I'm trying to talk
Pull
and
it
think
up.
at the same time.
Yeah,
that never goes well.
Yeah.
Model of basically the kind of more centralized chain, easier to use, lower fees. So that's kind of been attracting retail for the most part, right? But obviously when institutions come on, they're going to do things like real world assets and whatnot. They're going to need that added security that Ethereum has to offer.
I mean, a centralized landscape to go ahead and conduct transactions and activities is definitely got better value accrual to it. One of the big misconceptions in crypto is that if a layer one network is going to increase throughput and really increase block space and increase all of these things, they're going to allow a lot of activities or a lot of transactions to come through the network that are very cheap, that this is going to be huge for the layer one network. It's not. It's a deflationary response. Like you just increase the supply of block space, right? You just decrease the demand and the need for the native token of the network. Why would you anticipate price to go up? Because unless you have a ton of users that come onto the platform or suddenly it unlocks like this really big use case that can finally come onto the network and it gets realized, like where is that change in price going to stem from? And so to me, that's a big misconception that exists because we always talk about, oh, it's going into mainnet and it just has V2 coming and it's going to unlock all of these things. And then it's a big underwhelming event. And this is for Ethereum, they're trying to transition those transactions off into the layer 2 domain. And so that's kind of what's happening, right? It's having this maturity. It's going through maturity, I should say, of trying to get those transactions off the main net and have enough transactions on the layer 2 side to go ahead and still have that similar demand profile on the layer 1 network. But on my chart here, you can see how low the average gas price has been of late. I mean, for anybody that actually does DeFi and transacts on Ethereum, you very well know how kind of cheap in terms of cost of units of gas are. Hasn't been this low since 2020. 2020, like that's a long time ago. Like,
in crypto terms, that was decades ago.
I distinctly remember trying to do certain transactions back in 2020 that were kind of computationally expensive and being like, wow, this is expensive. And this was before kind of DeFi summer hit, where the cost of compute went through the roof. Like, we were trying to test some protocols back then. And then as soon as DeFi summer hit, we realized, okay, all these protocols are just not going to work, right? It's just way too expensive. I'm not paying $300 to go ahead and do something. And so that's how long it's been since we've seen gas fees this low. And this is really Ethereum trying to come of age. So why am I bringing this up is that the ETF can essentially like gloss over this shortcoming of Ethereum. Like, we're starting to see like some of its fundamental metrics as it relates to demand show some improvement on the heels of the ETF. Whereas like the supply side is great. Right, Ethereum supply side fundamentals are very solid. It just needs to have a demand catalyst on its layer one side. The minute it sees that, it's going to be off to the races because of that illiquid status of ETH tokens.
Okay, so to summarize here, it's got a massive. I feel like it's on a rocket ship, and people just don't know that yet. Right, they're not prepared for that because it's been so underplayed this cycle, and all of a sudden you get this ETF news, and all of a sudden people are starting to look at it. But when you hear the $14,000 price point thrown out from Zero Hedge, what do you think when you hear that? What's your gut reaction tell you?
I can't even. We've never seen a token have this sort of liquidity profile, so and that's why. I'm more of a Cosmos fan, and I have been for a long time, but they've really screwed up the narrative.
We're asking about ETH, you go to Cosmos. Wait.
I have to preface this because everyone keeps calling me an ETH maxi, and I really just need to preface this. I used Solana for a long time. I was a big fan of what was going on over there. Unfortunately, the protocols that were being built over there, they never really had like sticking power, and SBF kind of messed up what was going on over there. It was a great ecosystem, and I was a big advocate of what was going on over there. But as far as like staying power and, having these protocols create these different use cases for its native token, there's not really anything like Ethereum. And that's what is exciting to me, because I can actually go ahead and talk about yield and rates, right? I can't really do that anywhere else. So where am I supposed to hang out, right? So that's why I get painted this picture of an ETH maxi on the team, and that's fine. I don't really care, but I always have to preface it because I'm very open-minded on other layer ones. I'm always asking for what makes something so unique and special, and I haven't quite really seen it. And I really want to see it. Let's be clear. Like, I think Ethereum is going to have some downfalls in 4 or 5 years here, and the ETF will bring that. Maybe we can discuss that at a later date. But for now, like, I'm going to be honest. I kind of forgot my train of thought here. Where I was going, because I didn't want to.
So we're going to
maxi.
Yeah. So we're going to have to cancel the appointment at the tattoo parlor for you to get your third Ethereum tattoo on there.
Price
I'm going to summarize it so we can talk a little bit about outside forces, because I do want to talk about the Dixie. I do want to talk about the Fed a little bit. I think for all those out there, first of all, I want you to realize I did ask him. I tried to pinpoint him on this 14K price point for Ethereum. And I think Ben's point is here, you can focus on that price. You can look at the fundamentals. The fundamentals suggest there's a massive, if you add demand to the profile for Ethereum, it's got a lot of runway to go. So if
There's
you're looking at an investment
precedent
standpoint
for this setup, I'll
for this
phrase
setup.
it that way. So like 14K, sure. 20K, sure. I have no idea, right?
Yeah.
But whatever it is, it's going to be powerful.
Right. Okay. So and I know there was a question, what happens in June? I would just say, if you think a little bit longer term, this may help out your investment decisions rather than just what's going to happen in the summer. But with that, let's transition. I want to talk a little bit about these outside forces, because JJ, you set this up. You said, listen, everything's looking good as we're going into June, and it's really going to be outside forces, the Dixie, the Fed, that could really put any kind of dampening effect on this price action. Ben, I think you just laid out the case that people need to be thinking about as they think about the Ethereum ecosystem, whether or not they're properly allocated to something that could really, really run hot over the next 18 months. And so let's kind of break that down. Before we do, I do want to give a shout out to everybody who's here. Welcome. Love to have you here. All the questions. Definitely keep them coming because, you're giving us a lot of food for thought. I know I see a lot in here about saying we definitely want an ETH breakdown. So, Ben, I am going to bring you back for a one-on-one conversation. You can take all your thoughts and put them in there, and we'll unpack them. But, JJ, let's come back. Let's talk a little bit about the Dixie. I looked this morning. It was about 104.41. I feel like we haven't seen the capitulation events. We haven't seen the breakout events. Where is it heading next?
So if we look at this, the trend's pretty firmly down. We had kind of a retest of lost resistance last week, or lost support previously in the uptrend. Came right up, retested that 50-day moving average as well as the median range in its Bollinger Band, and failed basically directly on the spot there. And now it's sinking back to the low. So the key thing here is that we have some extremely important macro data coming out on Thursday and Friday. Thursday is the GDP number, and Friday is going to be core PCE numbers. So I think it's all just kind of setting the stage here for, I believe Friday is the monthly close as well. So it's just kind of teed up perfectly for a big move one way or the other. That we would either see Dixie sink below here, and this is ultimately, if it falls below the lows of earlier in May, I think this is going to open it up to fall below 100 throughout June, July, the summer months. I think we could possibly see it come down and retest the December lows at that point if it were to lose this level. And that obviously opens up the door for $80,000 Bitcoin, $5,000 Ethereum. I think all of those things are in the cards in the summer months, provided that DXY finishes this breakdown here. On the flip side of that, let's say core PC comes in hotter than expected, GDP higher than expected, and we see Dixie strengthen. If it regains this 105 mark, takes out the highs from last Thursday, then we're in that kind of risk-off scenario, and we'd probably see Ethereum start to fade back below 3,000 and Bitcoin fade below 60,000 in the summer months. So I think it's all kind of teed up for this macro data release that comes out on Thursday and Friday to set us up one way or the other as we head into the summer months, and then whatever catalysts are to come from there will follow after. But I think we'll see kind of the early tells of the market, if you will, based upon what Dixie does here into the monthly close.
JJ, what are you anticipating right now? You threw out two scenarios. What would be the likelihood for either one?
So if you just look at it technically wise, right, we had kind of everything looks bearish. So I'm expecting these numbers to play along with the narrative that the dollar is going to weaken. However, you have to be careful about that because of how many times we've just seen the Dixie straight up V-shaped recovery to new highs this year. So every time you count it out, as it kind of looks like it wants to break down here, right? Like, doesn't look very strong. It's lost the 200-day moving average now. It looks extremely weak, but it seems like every time it's against the ropes, it comes running back. So you never want to be too far allocated against Dixie due to its ability to just keep charging back to highs this year. But based on everything that this data shows, like we even see it came up and retested this 50 RSI mark here on the daily chart. If we look at the weekly, it's encroaching upon losing that, and you just see how there's not much support here below this level. You could see a pretty quick fall to 102, followed by sub 100 here in the coming months. So it does look bearish. I think the setup is what you would expect if the macro data were to play along and be favorable for risk assets. I think this is what you would imagine the dollar looking like into that event. Now we just need that data to ultimately play along.
So the odds are higher for a breakdown right now, but you're still keeping an eagle eye on the events and the announcements happening at the rest of the week, so you can really get confirmation before going really risk on.
Yeah, exactly. And I don't think it's going to be a scenario where, I don't think Bitcoin's going to go directly to 80,000 the day of this core PC number. So you probably have a window of opportunity there to just monitor the monthly close, see how Dixie reacts into the end of the week as well as Bitcoin. And then you can have a better read on the situation based on the direction that these two move. And you'll have a window of opportunity to act based on how those numbers cause the market to fluctuate.
That chart's interesting. If you look at that 50-day moving average and how price has kind of respected it when it wants to go ahead and have a trend reversal. So as soon as it bottoms out, it almost like retests it and then it continues on. So it does look pretty bearish.
Yeah, we'll see. We've been waiting for it, so
Mhm.
always you always have to keep an eye on it because it's never, at least this year, the kind of theme of it has been it seems like we're safe. The end of the year, it seemed like things are just going to be great throughout 2024, and that just keeps rebounding. So,
Ben, I want to bring you in here and bring up the conversation we were having offline before the show about the Fed and some of the messaging that was coming out about their ability to fight inflation. We were talking about the go-between what the Fed is saying they can do with rates versus what they're expecting to have to be done by the federal government in the US and really any government globally to actually curtail some of that spending if they really want to bring inflation down. How do you think that impacts? Can you unpack that briefly for the audience here, and then take that to the next level, which is, what's the impact in terms of liquidity for the market if the Fed is starting to change its tunes on what it can do with rates?
Definitely. And I think I'll start off by saying on Friday, there was an interesting speech by Governor Christopher Waller. He's been making the rounds of late. I think there's like 3 or 4 speeches from him in the last week. And he had this topic on what's called R star. It's like this theoretical concept of like what is the perfect Goldilocks rate that the Fed could sit or set where it's not restraining the economy and it's not essentially allowing it to heat up too much. It's just right in the middle. And what he ended up talking about was essentially how the trend for the past since like the 80s was just lowering rates, and so R star was just this theoretical concept was constantly going down to zero. And then he says in the past 2 years this looks like it's been changing. And if I pull up a 10-year, let's see, US 10-year bonds, zoom out to the monthly. Am I sharing my screen?
Yep.
I am.
I see it. Yep.
Nope, this is actually the price data. That's not what we want. We want the yield data. Okay. So if we actually zoom out, you can kind of see what he's alluding to right here, which you can see we're just kind of trending down until 2020, and then you see this reversal happening. And so his whole talking stance was on why R star is likely to be higher in the years to come. Like this is hawkish discussion that's happening. And one of his points was the fact that fiscal policy is in a really tough spot. And so what this feels like, it's they can't fight inflation alone. And they know that. And they're kind of like, we've done everything we can. We've raised rates. It's causing mortgage rates to be over 7%, right? There's nothing else that we can really do on our end to go ahead and bring inflation down. And they've even done a bunch of QT, and somehow the economy stayed afloat and they did the soft landing as they wanted to do. And they essentially told us they were going to try to do. And it's been a little bumpy, but success, right? Hats off to them in that regard. But they're now saying that fiscal policy is becoming a bit of an issue, and it's going to push the R star higher because if there's a lot of debt being issued and you don't have as many people buying that debt in the long term, yields are rising. And so that pushes this Goldilocks rates higher and higher. And so that was an interesting dialogue that happened on Friday. And it's almost alluding to the fact that the Fed is kind of realizing that rates might not be coming back down near zero again. And so I don't think the market has digested this information because it hasn't come from Jerome himself. But I'm very curious how this kind of goes into mainstream media outlets and people start pricing in things as a result. But this debt issue is going to have an effect on inflation because it's just like if people don't value the dollar that much, even at the government level, and they're willing to just go ahead and print more money to go ahead and pay these debts and just the interest rate on these debts, how can anybody view the dollar having, the worth that the market says? And it just keeps devaluing things. So it's interesting, I guess, future conflict, if you will, between fiscal and monetary, policy setters.
So someone could take what you just said and the information that came from Waller as there will be less liquidity, right? If we maintain higher rates, we could see less liquidity in the system. But I think, as we just talked about, the economy has stayed strong. There's still sufficient liquidity in the system, and the fact that the federal government is going to continue to have demand for dollars with all the projects, because they don't seem to have an ability to cut back on spending. Do you see an impact if rates stay high for an extended period of time? Because, as you just said, they're saying, listen, we're not going to see rates continue to trend down. We're going to continue to see them trend up. Is that going to be have any kind of impact on liquidity? And then, if I think about crypto, one of the main reasons that a lot of people are into crypto, they talk about debasement. There's a series of terms used for it, but they see it as a way to get out of that system. And they see it as increasing in value as the liquidity in fiat goes up, that these crypto assets are actually increasing in value. So what is the take there? What is the stance that someone may have on the impact of liquidity as rates stay high?
Well, the liquidity aspect, the US dollar has like almost 80%, over 80% of all transactions have the US dollar on one leg. And that is likely not to change anytime soon, right? People see the dollar, or they eventually are going to be engaging with these kind of debt dollar deposit tokens that have yield attached to them. And that way they can go ahead and earn 5-6% on their dollars. Why would essentially anybody, whether you're just retail or you're an institution or you're a central bank somewhere in the globe, why would you not look at that asset and want to store it? Because that has a great use case, right? It's used in over 80% of all transactions globally for foreign settlement, and you're earning yield. So you're not having a loss in essentially purchasing power, and relative to your own currency, it's probably gaining in value. And so that's strong, right? So that's in part why this, this whole doomsday scenario of the dollar going to be, it's over. The dollar as a reserve asset is over. Like, I don't see that happening anytime soon, right? The day that does happen is probably because the project that the Bank of International Settlements wants to do, which would be to create essentially a unified ledger and probably its own currency. But we're nowhere near that. So at least for anybody that's subscribing to crypto, essentially they see that they don't want to buy in perhaps to that economy, to that US dollar centric economy, because maybe their business is no longer in that economy, right? They run an application, a protocol, or they run some sort of organization that acts as an app on whatever layer one network that they subscribe to. And so they need to hold those assets essentially in their reserves. So you can think of their reserves as a combination between stable coins, which are probably US dollar stable coins, and then a combination of the native assets that they need to go ahead and run their protocol and perhaps pay salaries or engage in its own economy. And so that's when we think of like, you want to opt into crypto, you want to opt into a layer one network, what is the economy that you're going to be running your business and generating revenue from? I think that's when people have that shift of like, I'm not just going to hold the asset and just let it sit there in hope it gains value. Instead, I'm going to go ahead and be productive, and I'm going to try to create a business that generates this revenue of this token, this network that I'm a subscriber to, right? And gain wealth in that manner. Where typically it was, I'm going to start a business in whatever country that you might reside in and earn more of those sovereign dollars and pay my taxes and pay my salaries in that currency and in that jurisdiction, right? But this right here, once people understand that these businesses, the application, these tools allow you to go ahead and be productive, I think that changes the mindset for people.
Interesting view when you go from a look at liquidity to more of a sustainable future economy, which can actually be a way to lift out, not just in terms of owning assets, but actually building something. A lot to unpack there. I know today we could go further, but the can of worms, we're going to put it back on the shelf and allow for another time to bring you back, Ben, and have a discussion specific to this. Questions like Adrian's asking about Russell Napier's take on this and his thesis. We're going to have to get back to that at some point, Adrian. Just too much to unpack in a single show. But I think the future is bright for Ethereum. But I want to kind of summarize what we saw here. right now, all indications that the Dixie is going to look bearish going into June, which could be a risk-on signal. We're going to continue to see a battle between what the Fed is talking about and what the fiscal or the federal government is going to be talking about in the United States, but also globally about what the banks can do versus what the governments need to do in terms of spending. So something to keep an eye on, as well as these economies start to grow, such as Ethereum or Cosmos or Bitcoin. So with that, let's talk a little bit about some trading opportunities, as we always like to do as we close this out. Sometimes there's something to talk about today, and sometimes there's things that we're looking for. I think, JJ, last time you were on here, it was a little bit of sit on your hands, not quite ready, because we were waiting for the Ethereum ETF news to really come out and give us some indication of what it was looking at. So I'm going to want you to unpack, both from a Bitcoin perspective as well as an Ethereum perspective, what are potentially some opportunities people can look at from an options perspective. And then, Ben, we can talk a little bit more about maybe some of the opportunities you're looking at for some of those other ones. Before we do that, I do want to give a shout out to CoinCall. CoinCall is the exchange that JJ's highlighting every time he's going over his options videos. Those are the training videos that many of you have likely seen, as well as when he's looking at the options chain and some of these options contracts that he's doing right here on the show. If you're interested in starting to trade options, which is a great way to benefit from this bull cycle, definitely check out the link in the description. Go there and sign up using our link to get into CoinCall. It also gives you access to future events where we're doing AMAs and we're talking more about how to get your options journey started and then how to optimize it as you go further. I will say, and I say this all the time, if you're on the fence of whether or not you want to start trading options because it seems complicated, I get it. All of us do. All of us had to start somewhere in terms of learning the terminology and thinking about the strategies. That's one of the reasons JJ's put together these videos. You can learn how to do the nuts and bolts of the levers and finding contracts, but you actually have to think about how to set up a trade and think about strategy. That's what JJ's laying out. And then there's no better time than starting today because those opportunities will continue to emerge, especially as we go into the end of this year and going into 2025. And you're going to want to be prepared. So you can start doing paper trades now. And there's even some tools, I think, within CoinCall that allow you to look at various ways in which trades can play out. So definitely now is the time to get started on this and hit that link in the description and get going with it. But with that, JJ, I want to bring it back to you. Walk us through if right now is a good time to be looking at BTC and ETH trades, perhaps again going into the later year, and what you're actually looking at.
I think as we get closer to Thursday, so that's when the GDP number comes out, I think we'll start to see Dixie and ultimately Bitcoin, kind of the market's going to show its hand here. So not in a rush to enter into a trade yet. As I kind of look at the structure, I think Dixie could come up and reback test this loss range in the next couple days or so. So I think your best opportunity for the highest risk reward ratio will be prior to that Thursday morning release. So sometime Wednesday into Thursday morning is probably when you want to look to enter a position. In terms of that, I think probably the next couple of days, we could possibly wick lower on both Bitcoin and Ethereum, or we might just kind of continue in a chop solidation range. Maybe we don't go above 69K or 4K, and we kind of stay between 67 and 68 on Bitcoin and 37 to 39 or so on ETH. And we kind of see that's the expectation of the options market here. So if we look at Bitcoin, we see that there's this inversion on the IV term structure chart. So we see the May 29th expiry, which is tomorrow's at 60 IV, and that sinks all the way down to 52 IV on the first week of June. So it seems like the options market, and same thing here on ETH. So we saw how overheated this got last week after the ETF approval. The at the money IV shot up to over 100, and now we see that plummets all the way down to 63 for the May 29th expiry and 63 for the June 7th expiry. So these are starting to become attractive. I just don't want to rush into a position just yet, but I would keep an eye out for calls into that Thursday announcement. And I think you're going to probably get a good opportunity for some upside here. If everything that we were discussing earlier ultimately plays out, we see Dixie reverse into the month end, and Bitcoin and Ethereum are kind of set up for a bullish June. So I think you could look further out on the June calls here. You could even go July, September. But if you just want to look at the June calls, I think anything above all-time highs, the 72,000, I think these will become attractive as we get a little bit further along in the week. And on ETH, I would look at something like the 4,000s for June, which are currently trading around, let's see here, currently trading for 258. So you let another couple days go by, and then you could buy those into the event. You're not really risking a whole lot if you're just going to hold it for 24 to 48 hours or so and see ultimately how that monthly close resolves. But as we said, if Bitcoin ETH can get bullish engulfing candles on the monthly charts, Dixie fades below 104, we're set up for a pretty explosive move in June. And I think you want to have that upside optionality into it, especially as that IV term structure chart becomes compressed, as prices still within the larger range that it's been in for the past few months. You'll really see those IVs spike up once you see Ethereum break past 4,000 and Bitcoin past the 72,000 ranges, when you'll see that really explosive move happen in IV. So you want to be positioning yourself to be in position prior to that explosion in IV so you could sell into it, rather than being the one having to chase that and try to buy call options at extreme premiums. So it's all about trying to figure out the ways the market can move beforehand. And I think it's setting up for an explosive move here in the next few weeks. So I do think you want to keep an eye on that upside optionality here into the end of the month. Not
So
just
really,
yet, but next day or two, keep an eye.
Yeah, so just to make sure, kind of clarify there, you're really looking for that confirmation in the Dixie being a breakdown, and then really being able to use that as a catalyst to see these calls prices explode. Is
Yep.
that right?
So I think
Okay.
if you see kind of the mental map I have of it right now, is you would see Dixie fade below 104. Thursday and Friday, it would break below this range, have a monthly close somewhere below 104. At the same time, you would ideally see Bitcoin have a monthly close above 70K, Ethereum a monthly close above ideally 4,000, but at least 3,800. And that would really set us up for a nice month of June here. I think that could be a good setup for momentum to carry us forward to new all-time highs in both assets in short order.
Okay. Well, there you definitely have an opportunity if you're looking at some options plays. And obviously, if you wanted to play that in spot, you could, but the options is where the real profit is going to be. Ben, I'll end this with you. You've talked many times about looking at Ethereum as well as the L1s, that at some point, so I think you've been very clear on the record saying at some point those could get a bit of a run if Ethereum starts to get a little bit bid up. So what's your take right now? If you were looking at this, are you still just going to continue to DCA into Ethereum for, let's say, the next quarter? Or are you starting to look at positions in L1s?
I'm starting to look at what project seems to have not necessarily the narrative, but is it going to be able to capture any mind share of the market of what's to come? Avalanche is, there's a lot of, I think, negative sentiment around the founder over there, and I don't really have a take one way or the other, but I see him coming out of the woodworks and starting to talk about some of the projects that exist on Avalanche. And it's important to remember, why is Cosmos essentially such a laggard in the market? Is because there's no central voice, there's no central labs, if you will. It's got a whole ecosystem. And if anything, it really discusses or it really paints a picture of how decentralized that ecosystem is. But when it comes to price appreciation, and if we're trying to find any beta in the market, that probably doesn't lend its hand to that. Because if someone's going to push the dialogue on, say, an ETF, the next wave of ETFs, because that's what everybody's talking about already, is Doge going to be the next ETF? Is Avalanche? I would say Avalanche is going to be pushing very hard to try to get on that table and in that conversation to be one of the next ETFs. And it's been a very hated asset. It's been running a little bit, but nothing too crazy. I don't see Atom, the Cosmos ecosystem, hitting into that conversation at all. Solana, of course, is going to be right up there in there, Doge. And so what this really means is, I think if we look at what JJ was just talking about, right? ETH, call options, trying to long-term positions. We even wrote about it recently on us almost getting that fill and kind of almost having, I don't want to say blind luck into a white swan event, but the data was giving kind of what we wanted there, and we went ahead and took those positions. But if you go on CoinCall, and this is kind of what I'm getting at here, which is, if there's going to be this dialogue on other tokens possibly getting an ETF, go ahead and look at implied volatility levels, which is the premium that's attached to how expensive a contract is. Look at those IV levels. When they start to get depressed on some of these alternative layer ones, you can actually go ahead. I don't know what the expiration date or how far out they go. They probably don't go out as far as ETH and Bitcoin, but maybe there are some out there that would line up in this similar mindset that you can go ahead and get kind of long-term call upside to go ahead as as prices start to appreciate. You can start managing that position because that lets the market come to you in a sense. Like you don't have to go ahead and act on FOMO. You're just responding to FOMO. I think that's really important for people to appreciate, like how you get into that position where the market makes its big move, and then you just respond by taking advantage of kind of dislocations that exist. You don't want to be chasing. You want to go ahead and kind of respond in a good mannered way. And so if we think if ETH's going to rip or even Bitcoin's going to rip in the second half this year, how can you position yourself to go ahead and continually hedge a portfolio by shaving profits constantly? And that's what long-term kind of upside call exposure can give you in a portfolio if you start doing it when implied volatility levels are very low. That's the key.
That is a nice way to wrap up today's episode for everyone, the entire audience, to be able to have something to go look for, do some research on their own, figure out if they have some new assets they want to allocate to, or perhaps double down on some. And with that, we're going to wrap up today's show. I'm not sure if it's going to be a slow week. It sounds like we got some fireworks at the end of it, maybe with Dixie breaking down and starting to see some risk on, but very exciting times. Definitely join us Tuesday and Thursday. We'll be back on breaking the latest price action. But with that, I want to say thank you to Ben and JJ for showing up, breaking down the alpha. For all those out there, we appreciate you. Definitely come back this Thursday. We'll be back on with Benjamin and JJ breaking down the price action. Have some dry powder. You never know when you're going to need it. And with that, this is Marconi White signing off.